Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest. Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.
Good. Hello, everyone. I was gonna say good evening, but I know you may be watching this on the replay, so it may not be evening where you are when you're watching this. Apologies for that, right? So I spent the time trying to kind of strategize with my son and say, okay, daddy's going live. I need you to stay in your room. He says, sure, daddy, no problem. He's good. The minute I played the intro and went live, he wants a snack. So that's what that delay was. I'm sorry about that, guys. So I hope everybody's doing well. I hope it's a good week to be an investor. At the time I'm doing this recording, Bitcoin would have went past 100,000 US, which is, I have no words. Trans Jamaica also had a great week. I have no words for that either, but something that I've been waiting for a long time. And Limitless, I can't complain. So I took some profit this week for the first in a long time. So locked those gains in, and I'm definitely happy, especially based on how the rest of the week went. So if you're a part of our investment challenge, you'll notice how I've been talking to you guys all week about Trans Jamaica. We're posting in the community group and, just watching it. And so, I mean, that's definitely a benefit of being a part of the investment challenge. This is not the general group, but this is a private group for those who are a part of the monthly challenge. So what I do for that group is just share my personal thoughts on what I'm seeing. I may share screenshots, show and explain some topics and stuff like that. So I'll talk about that later. But this is a great week for me, great week for investors. And yeah, this topic that we're here to talk about today, I'm smiling about this one as well, because this one has led to some great success over the years. So I'll get into it shortly. Limitless is asking if I own Bitcoin. No. So I actually don't own Bitcoin directly. But I do own some other currencies. Started a while now, started from 2016, 2017. And if persons remember what I used to say, that same crypto portfolio that I have still to this day, at one point, it went down, I believe, almost 98%. So for those who have been buying Bitcoin for a long time, you remember when it first went to 17,000, there's a big deal about it. And it went down all the way down to like maybe below $5,000, I think, 5,000 or 3,000 or something like that. So it went from 17,000 all the way down. And I had a crypto portfolio that was valued about maybe 2,000 US, 3,000 US at the time. And that went all the way down to maybe $500 or less. I didn't sell. I kept it. I'd bought like Ethereum, Cardano, Ripple, and some others. So I'll talk about that another day, because this is not a crypto episode. This is a dividend investing episode. But yeah, so I certainly can't complain about that either. But let's talk about dividends tonight, right? Last week I would have done a little bit. Let me go to the meat of it first, right? So I would have shared this example last week. Hold on, let me see. Okay, so I'm gonna do a recap of what we covered last video, but I really recommend that you watch that last video, right? So last video I went over the fact that the best stocks and the stocks that you should probably seek to get in your portfolio will offer the best of both. Now, not a dividend investor only, not a capital gains investor only, but both. And I went through these slides, showed an example of TransJamaica in terms of its dividend yield at a certain price, and of course compare that to IPO price, etc. So this idea was that, so persons will say, will look at a stock now and say the yield is bad or so on, but the yield is gonna be based on your purchase price. So kind of take that out your mind, that you can look at a stock now and say the yield is good or bad. It's only gonna be good or bad relative to the price that you purchase, right? So that's one. And two, we went through like calculation. So I'm not going to go through this in depth, guys. Apologies for those who are seeing this for the first time, but watch the video that we did last week and you'll get through all of this, right? We spoke about capital gains as well. At the time that we did this last week, TransJamaica would have been $4.79. That's not the price today. And the point of doing this video. So of course this number would change. And of course we went into the fact that, you know, best of both is what you should go for. So let me go to what I'm focusing on today, which is my personal dividend investment strategy. So what I like to do here and what I'm trying to get at is I want to do more content about the practical side of investing. And that's what I'm hoping to accomplish with the way that we've been doing the lives now, right? So I realize that there's a gap in terms of just, you know, connecting what I know and what I talk about here versus where you are on your investment journey and what you need to know. So I've been trying to keep the videos a lot simpler, not get as technical, because I was doing like a lot of stock reviews in the past, or we may have our CEO series and things like that. And what I realized is that persons weren't really connecting the dots, right? I thought, you know, it was easier than it maybe really is, but I have to appreciate that, one, you may not have watched every single video that we've ever done, so you may not be able to connect the dots between the stock reviews, the CEO interviews, the earnings calls, etc. So I'm making these videos, or I started doing these videos to just make it simpler for you to say, okay, this is what Jermaine is talking about. This is how you can make money with your investments. And then I also have been sharing more consistently how you can work with me outside of these videos and, you know, things of that nature, right? Hope that makes sense. So let's get into it, right? So dividends, again, as we usually do, I'm going to explain briefly what the topic is and get into just the content, right? So dividend, as we discussed previously, is a portion of the company's profits that are paid out. This is not guaranteed, right? Not even companies who can pay a dividend sometimes don't, because they may want to use that capital to do something else. All right. And dividends, one of the greatest selling point to me is the fact that they come without you having to sell your shares. So you get income without losing position, which is a big deal for me as it relates to taking capital gains, right? Because even when I took profit, you know, or when I used to take profit, I'm like, okay, what price do I buy back? What's the best price to buy? Now I have to watch the queue and wait. But when I when I work with dividends, I know and I'm, confident that I don't have to worry because I still have my position. And when the next dividend is announced, I'll get those gains, one more time. All right. So we're gonna talk about why a dividend strategy works and why you should consider it. Right. So it will provide you with steady income. Now, not every company pays a dividend quarterly, and sometimes there'll be ones that pay quarterly maybe, and then they may skip a quarter, skip two, depending on what happens, right? So some try to pay twice per year, some try to pay at least once per year. I'm assuming here that if a company is to be considered a dividend paying company, they're paying at minimum one per year, and have been paying it consistently for the last 3, 4, 5 years. If they have not been doing that, then they're not a dividend paying company. They may pay one dividend, let's say in the last 5 years. I wouldn't consider them a dividend paying company. But why this works is the consistent income one. 2, you have the opportunity to reinvest, right? So this term that you see here, that's called the DRIP. That's Dividend Reinvestment Plan. I believe only one company in Jamaica does this, and that's Sterling Investments. And in the US, it's something that you can set up quite easily on your account. It may be something that we cover on a future video, but I have that in place for my US portfolio. It pays the dividend to my account. 1 day later, it purchases stock using the cash that I have on my account, and it's not something that I have to do manually. So every time my dividend comes in, it purchases more shares, and my position keeps increasing. Though, depending on the yield, it may be a small amount, but it's going up each time. And third thing as to why it works and why it has been working for me, I'm not necessarily concerned about the volatility of stock prices, right? Because either way, I'm getting income each year. Now, for full transparency, and Jamaica is a tricky place, right? We don't really like to talk about money in our culture. And even when you do, you're kind of afraid to honestly talk about how much you make, because 1, people may think you're bragging, and 2, you may be concerned for your safety, right? So usually persons are comfortable sharing when they believe it's a small amount that persons won't necessarily be jealous of them for, right? What I used to do when we just started on Twitter is share, how much I've made in dividends each year. Now I stopped sharing that because I'm just not over Twitter as much anymore. But I've been thinking about how much, I've made in terms of dividends over the years since I've started investing. And it's a good amount that would, I'd say, represent out of my total, profits. It's something that I'm quite comfortable with. It's something that is my long-term strategy. And I'm thinking that, 10 years from now, 15 years from now, when I'm at retirement, I'm going to be having maybe 80% or 90% of my portfolio being focused on dividends. Now I have 30% of my portfolio focused on dividends. So it's not the majority. I do go for capital gains, and it helps me to have a balance. So each year I get income from my portfolio, regardless of prices, and then I can now use that cash to either purchase new stock or add to the existing position, and my portfolio will keep growing over time. All right. So I'll get into my personal strategy now. It's very simple, and it's something that I'll take questions, of course, in a couple of minutes, but I don't think you'll have any because it's very straightforward to understand, right? But we're gonna take general questions. So if you have questions about investing, dividends, any particular stock, feel free to post those and I'll answer them. And we just see where we go from there, right? So this is my personal strategy, and I started this in 2018 or 2019, one of those years. So I set an income goal for my portfolio, right? So when I just started doing this, I'd set like a goal of 20% of my portfolio in income for the year. So I may say, well, if my portfolio is $1 million, I try to make 200,000 in that year, right? Because for me, that was a conservative goal. It was one that didn't necessarily mean that I have to do a lot of, investing, and then I would have something that is meaningful and tangible that can be measured. So I started out that way. So what was happening at that time in the market, of course, if you remember 2018, 2019, the market was doing really well. So what I was noticing is that I would get to my goal very quickly. When I set a goal for 20% of the overall portfolio and, stocks were going up 100, 200, 300%, I'd be like, well, that's not a realistic goal based on how the market is performing, right? So I shifted that goal to switch to an amount, right? So I may say, well, I want to make, instead of 20%, maybe I want to make 500,000, maybe I want to make $1 million, or whatever I thought was reasonable after I would have done my budgeting with Renee for the year. So after we set our personal goals and we may plan for a vacation, may plan to do certain things, I look at how much I'll need to earn from my investments to be able to cover those, right? Because usually when we budget, our budget is maxed. So Mindset Mastery is asking, how do I set up the automated reinvestment strategy with Interactive Brokers? No, I haven't done it on Interactive Brokers, or did I? I think I did, actually. Let me look into that and find out. I'll try to find out during the stream, but it may take me longer. So message me on IG, I'll find out and tell you. But usually you have the option to select when you get the dividends. I think it gives you a notification, or maybe when you're going through the settings, something like that, right? Yeah, so I was saying I'm setting this income-based goal now, and I'm saying, well, they should be able to cover up my vacation, maybe any purchases I want to make around Black Friday, because back then I'd want to, upgrade my tech each year. So I'd set, goals to include the amount of money that I want to spend. And so that's a starting point, right? And then I would see what opportunities were on the market for me to be able to get to that income. Now, I must admit, and this is something that I've heard persons say, that it's easy for me to have my investment approach because of where my capital is now. That's partly true, but at the same time, I think that if there's anything I've learned since I started investing, that it's still usually better to try and minimize your trading activity. Meaning, so when I say to persons that I try to do maybe 4 or 5 trades maximum for the entire year, and that's why I'm usually waiting until I have double-digit gains, right? No, triple-digit gains, actually. So I don't necessarily wait for 20% or 30%. I usually wait for 100% or higher before I take profits. Now, one argument to that, or one alternative to that, is that you can do, 30% one month, 30% the other month, 30% the next month, and 10% the next month in 4 months and get 100%. But to me, that's 4 trades. I don't have the bandwidth to do that much trading. And usually you have to be quite, not necessarily that you need to track every day, but you need to know with some amount of certainty how the trading will go. And I don't always know that. I'm not always tracking it close enough to be able to do that. So I try to minimize the amount of trades that I do. So I'm waiting a little bit longer than maybe an active trader, but I'm also not passive as somebody who just buys and holds forever, right? Because I think there's a balance that's needed there. All right. So I see those questions coming in. Keep them coming. I'm checking on IG as well to see if there are any questions. I see your questions, Zay. Hopefully I'm pronouncing that correctly. Is asking what dividend stock it would be best to invest in going in 2025. I'm going to have a video on that, right? The best dividend stocks for 2025 for both the Jamaica stock market and the US. So look out for that. And DSP21 is asking, how do I invest in dividend stocks in the US market, and does it make sense to do so? Short answer, yes, it does. And the benefits is that you get yields in US, you get dividend in US, and then you can reinvest, right? And Omari is asking, depending on the content, could you make a short video tutorial on how to set up a drip on interactive brokers? Yes, I can, for sure. All right. And I see your question, Limitless, and I see your question, Althea. So I'm almost done with my slides, and then I'll answer as much questions as I can in the time that's left. All right. So the final part here is that I get to reinvest in more shares, right? And I did an example for the investment challenge group, I think in May or June of this year. And I showed them what it would look like if, let's say, you take a stock like Trans Jamaica, or you take a stock like Dolphin Cove or some other really good dividend paying stock, and you look over a 5-year period. What would happen if you bought shares, take the dividends, reinvest, take the dividends, reinvest, and you've done that every year for 5 years? You would have one, capital gains, and you would have a good amount of, so let's say even that company is paying 5% per year in dividends, right? Conservatively. Over 5 years, you'd have had 25% profits that you've reinvested. So not only would you have maybe 30, 40, maybe even 100% gain over the 5 years, you'd also have that 25% from dividends. So this is what I'm talking about here in terms of reinvestment. Now, something that I see with a lot of persons, and I'll say this out of just understanding that everybody's on their own investment journey, but there are persons who I think are just maybe a little bit too impatient with their investing, right? There are persons who only buy when the prices are going up. There are persons who only are interested in a company when everybody's talking about it. And that used to happen to me a lot too, right? Because I was generally uncertain about where I'm going to make money. So I'm in the groups, I'm looking to see what people are talking about. When they're talking about it, okay, that's when I buy. Sometimes I'll make money, other times I may get caught buying at a high price. So that takes me to the question that Limitless asks, what would I say to someone who bought at $4.98 for Trans Jamaica? I would say you have to know why you bought. That's the simplest way. Now, I said this on our community call on Friday, right? There's always two sides to it. The person who is buying the stock, in their minds, they're thinking that more is to come. They're thinking that it's at $4.98 now. They're expecting that it may be, $5.50 or $6 or so on, right? But the person who is selling is thinking that the price is going in the opposite direction. They're selling at $4.98 because they think that maybe it has run up for a while and it's time to take profits because it's not going to go any higher. Because really, if you think about it, you would not sell if you thought it was going to go higher in the short term. So there's always this, two different mindsets, right? And who is right? Only time will tell, right? So of course, the persons who sold at $4.98 are probably happier now because they thought, well, hey, I sold before the price went back down. But those who bought at $4.98 now need to remain convicted as to whether or not they made a right decision or a wrong decision. Now, if you feel like you made the wrong decision, just sell and move on. If you feel like you made the right decision, that's where you wait, right? So I'll just say that quickly to that question, Limitless, and hopefully that helps, right? So let me get through this because the focus is dividends, not capital gains this evening, right? So here are some lessons that I've learned, and I think this is my last slide, right? There are companies who I would have bought stock to expect a dividend payment. Sometimes, especially like junior market companies who are new and say, hey, we're going to pay a dividend as a part of our policy. It's always subject to the company's decision, right? So the company may miss a dividend payment or two, right? It could be based on a number of things. So dividends are not guaranteed. That's the number one thing I've learned in how my dividend experience has been. Two, and this is a big one for me, meaning I realize that my personal priorities will always impact my plan to reinvest. Because in Jamaica, we don't have it automated. I remember when I got the dividend payment from Trans Jamaica earlier this year, I had that money sitting in the account and we needed to pay a bill. And so the money had to be pulled to pay the bill. But if it was reinvested, maybe I would have thought about something else or some way else to raise the money, right? So when you get the cash, it may be tempting to pull it for something personal, right? So which is why I always recommend that you either don't have easy access to your investment account. It would almost be better if you have to go through a longer process to get your money because you may be tempted to pull it. And finally, there is an opportunity cost, right? And by the way, I'm sorry if my background is loud. My son's room is right behind this room, and I can hear him loudly. I don't know if you can. There's always an opportunity cost. And this could be a video by itself, but there's always a choice for a dividend investor. Do I continue to invest for dividends, or do I continue or look for something else in terms of cap gains, especially when you see, companies gaining 50%, 60%. I look at that sometimes and wonder if I have the right strategy. And I said, you know what? I prefer consistent income to be a part of my portfolio. So as I mentioned, it's 30% of my portfolio. It's not the main thing, but I look forward to having that consistent cash. So that works for me, right? It doesn't work for everybody. There are some persons who are waiting on cap gains for years now and they have not seen it, but I've been getting dividends every year. So you have to weigh that opportunity cost honestly and decide if that's worth it for you, right? Let me see if that's, any questions? Let me look through them now and answer as much as I can. While I'll just say full disclaimer now, there are some questions where I may say to you, just ask in our investment community so I can give you maybe a more fulsome answer, right? So Althea is asking, can you state what are the pointers to look out for from a company apart from the prospectus in order to buy into a company with dividend offering? Great question, Althea. One of the first things I look for is I go to look at their dividend history. Now, if it's a company that's about to IPO, this is gonna take some educated guesses, right? Meaning, I may look at what a company wants to do. I may look at their commitment. Most junior market companies may say we'll pay 25% on net profits as a dividend. So I'll say, okay, I'll do that math. And if I look at their projections and I think the projections are risky, then I won't be expecting a dividend from that company. So it really depends. One sec, guys. All right. So Althea, I'd be looking for that. Next, I'm looking at the history, right? So let me show you what I'm looking at. So I'm going to share my screen and I'm looking at, for example, the corporate actions. How often do they pay dividend if they're already listed? Have they missed a year? Have they been paying consistently and then they've stopped, right? Because those are things that are important. And then, of course, if it's a company that's not in my portfolio, that's when I'm calculating the yield of it, because the yield is going to be extremely important at that point. Hopefully that helps you. So Mindset Mastery, I'm happy that you made this comment because I thought about saying this as well. Now, I am for dividends, but I'm not always a fan of fixed income instruments, and I'll tell you why. It depends on the offer. If it's really attractive, then it may be worth it, sure. But I have to think about how liquid that investment is going to be in terms of if it's something that's going to be tradable, or two, if there's a change of plans in some way, shape, or form for me, can I exit that investment easily? So fixed income is good, but you have to be certain that you won't for any reason need that money. All right. So that's something to think about. All right. Ingrid is asking, do I think it's a good idea to hold a stock for over 10 years without taking profit? No. No, I don't. I don't think that's a good idea, especially based on how the market has been. Now, it depends on your overall strategy. Let me say it that way. But you're asking me, right? Do I think? I would say no, right? 10 years without taking profit, that's a level of risk I don't take. So I'd say no. Dion meant, I'm new, my question may be very dumb, but why trade at all if dividends are good enough? That's an excellent question. That's not dumb at all. Now, when you trade, right? Let's take, which way do I want to take it from? So the maximum you'll make from dividends, Dion meant, is that you may get maximum 10%, 12%, depending on your average price. Capital gains are limitless. so it's not a dumb question, but I wanted to appreciate that difference, right? I thought dividend investing would be enough, but I don't have the amount of shares that I want. Now, if I had, let's say, 50 million Trans-Jamaica shares, then I literally wouldn't have to work. I would just use that dividend income to live off of. I'd create content every day. I'd go to the beach with my wife and we'll travel the world, because that amount of income that I'd get back from those 50 million shares would be enough to live my daily life, and the capital gains would have been ridiculous, because if I have 50 million shares, those 50 million shares at $4.50 per share is worth 500 million. So my net worth would be 250 million or 300 million. I'd be getting income of maybe $5 to $10 million every year, and I wouldn't need to do anything else, right? But most of us on this live certainly aren't at that level of shares, right? So we can't just do one or the other. We have to do both, right? Great question, though. I'm currently in a dilemma. This is Sean. Depending on your capital, do you think dividend investing could hamper growth of capital? Because capital gains, especially in the long run, can give better percentage growth. Awesome question, Sean. I'm going to answer this one inside the community. So post it in the chat inside, because I think you are in the community, Sean. I think I saw you in the list there. Yes, I see you, Sean. So ask it in the group and I'll answer it. I was planning to do an impromptu live stream any day now, so ask it there and I promise to answer it for you there. Limitless saying, what if it hurts to realize the loss at 498? What are you saying? For those who purchased that at 498, what if it hurts to realize the loss? That's a great question. I'm assuming that's what you're asking, right? So what I would say is this, and I had this discussion with a client Client, if you're watching, you know, right? We had this conversation. So let me answer this with a story, right? So I'm working with this client, and we're talking about her portfolio, because as a coach, I can't tell you what to buy, right? I'm not a financial advisor. I'm here to teach you, help you to create your own strategy and to execute in a way that, you know, drives you to your goals. So we're having a conversation, and we're talking about you know, potentially taking loss on an investment. And so I gave some scenarios as to what it may look like. Now, let's say in this case you purchased at 498, but the stock is now down to 460 or 450, and you're feeling like, man, you know, it was just 498 yesterday, now it's here. What do? I don't want to take a loss because it's going to recover soon. Now, you've heard the term, I'm sure, that markets have cycles. Stocks have cycles too. Now, it may hurt to take the loss, but it depends on what your goal is or objective is. If you're investing for a goal that you need to realize in 3 months, you have to appreciate that because of how much the stock has gone up, right? Earlier this year, Trans Jamaica was about $3.20. And I know this because my wife bought some shares for her mother this year, and we bought those shares at about $3.20, right? Just this year. So because of how much it has gone up, it's not a lot of pent-up desire for profits were there. And so persons would have taken profits because maybe they're at 100% or 200%, or maybe they've been waiting from IPO. So you have to understand that persons who bought at 498, you may have to wait a while. Now, nobody knows the future. Next week, we may be having this conversation and it's at $6. Who knows? But I think it's better to be decisive. If you're going to hold, just hold it. If you're going to sell, just sell it. You don't want to be in this state of, should I sell? I'm watching it go down and I can't bear the pain of it being, you know, 10% down, 20% down, 30% down. Just make a decision. If you're deciding to hold, just hold it. Keep on buying shares to bring down the average price. If you're deciding to sell, take the loss and move on, because you can always make more money, right? So if it hurts, limitless, I get it. But as an investor, you have to be decisive. You can't just go through the motions, right? Because if you sell and take the loss and then it goes back up again and say, see, that's why I should have waited. But those who make money in investing are those who are decisive. You can't make money consistently in an accidental way, right? It's not going to be, you know, buck ups 3, 4, 5 times, right? That's not likely to happen. All right, NB Lee, thank you. He's quiet down a lot more now. Krishna, what is your outlook on Trans Jamaica for 2026? I'm assuming you mean 2025 and beyond, given the upcoming increase in dividend 25 to 35% relative to the offer price of 141. Krishna, I don't know if I want to answer that question yet. Let me hold on and see. Sean is asking, is Wigton a dividend stock? I don't consider it one. Yeah, I don't consider it one, I'd say. Do I think VMIL is a good dividend company? Let me have a look here. So VMIL was my first IPO, right? Bought it, was my first local investment. Let me say it that way. So I remember this very well. So the IPO for VMIL in 2017 was $2.33. Bear that in mind, right? As at the point of this video. So with that in mind, and can we see the 5-year graph here? VMIL went all the way up to $13, by the way, right? So it's down 75%, 80%. So let that inform you as you ask that question, right? So remember, I want you to watch the last video, Devon, to answer that question. Look at this. This is their corporate actions in terms of dividends over the last 5 years. They paid 3 cents in 2020, 15 cents in 2021, didn't pay any for 22, 23, then they paid 3 cents in 2024. I'll just leave that with you and let you decide if you think they're a good dividend company or not, based on what we discussed last week. Sean, new group. All right. Link is in the description on YouTube, right? Andrew Senior is asking, 10K worth of shares in Transjamaica over 5 years will be worth the investment or any other instrument? I'm not sure of the question here. Andrew, please rephrase and ask it again. I can take maybe 3 more questions, guys. Ask them. Do I believe Wigton energy price will increase because it was recently awarded a government contract to build a larger solar? I think it has increased since that announcement. So, I mean, I think, yeah, why not? Follow-up question from Transjamaica, from Krishna. Do I think Transjamaica will be able to meet their dividend aspirations for 2026? I love this question, Sean. So since I already told you have to ask the last one in the group, I won't do that to you for this one. Do I think they'll meet their dividend aspirations in 2026? Let me give you the answer in the form of homework. I'm a teacher. I love to give homework. So this is what I'll tell you to do, Sean. Look at their balance sheet. Look at how much cash they have. Look at the last 3 quarters and how much cash they've generated in terms of profits, minus any dividends they would have paid, and look to see if it's realistic for them to have the amount of cash to meet that target. That's how I'd answer that question, because that's the right way to approach answering that question. Not whether or not I think it, but their balance sheet will tell you if they can do it or not. All right, with Scotia price moving up $8 to $10 in capital appreciation, how do you think it will impact their dividend payouts, current and in the near future? Scotia, let's see. Guys, I've been trying to get an interview with the CEO of Scotia for a while now. If you can help, please help me. I've tried. So if there's anybody watching from Scotia, I'd love to have an interview with your CEO, if you'd be so kind. And if you are watching and you work for a company that's listed, or you represent a company that's listed, and you see that we have not interviewed them, please help, because we've tried. And yeah. So I like Scotia's consistent dividend. That's actually pretty cool to see. At least 3 payments per year, 4 payments last year. Let me see the total, 25 cents. This looks like over $1. That's 80 cents and 60, $1.40. Of course, the price is $46. So, I mean, if you're just buying now, that yield may not be attractive for you, but if you've been holding for a while, right? So let me see the question. Do I think the impact to the dividend payouts? So the price, Harold, and let me answer your question this way. The price doesn't impact their ability to pay dividends or their willingness to pay dividends, right? So I'd be looking at same thing I said to Sean. Look at their balance sheet, look at what they're able to do, but the price appreciation doesn't impact their ability to pay the dividends. So they're up 21% for the year. So I'd be looking at when you say it's up $8 to $10, from when? Because it's $46 now. It was 44 at the start of the year. It was $39. Okay, so that's what you're saying, up since here. Okay. But the price doesn't impact the dividend payout. Dwight is saying Wigton is okay. 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 Wigton is a good dividend paying company. Okay. Okay. Dwight, no problem. Wigton is paying more dividend even with the new CEO. Don't let anybody fool you. Dwight. Okay. All right. Roger is saying, do I think Omni is a good stock for the medium term, 2 to 5 years? I know I did a prospectus review for them. I'd have to look to see. So after our company lists, I try to kind of feel them out for the first year, because everything that you hear at IPO could be it's good to feel them out. Let me say it that way. It's good to feel them out. From Wigton is out, I get a consistent dividend payment. Consistent dividend payment. Dwight, I'm looking at the screen. They missed one in 2023. So when you say consistent, okay. Guys, so Wigton is good for you, decent dividends, and the cost is low. Okay. All right, guys, I'm going to leave that one alone for now, but I promise to cover it. That's all I'll say. Or we'll say CB begs to differ. Okay. Andrew, I see your comment. I can't even put it on screen. That's what I'll say to you. All right, no questions on Instagram. Guys, I have 5 more minutes to go. I'll take some more questions if you have it. But let me use the time to invite you to our brand new investment community. It's on a brand new platform. We're moving away from LinkedIn, Facebook. We will maintain a Telegram group for some time. I'm not sure long term how that will look, honestly. But we're encouraging everybody to join the community. The new community, it is free. It will always be free. But of course, we do have other groups that are more smaller, that allow for more targeted conversations. I can, go deeper into certain aspects. And so there are tiers to the group, right? That's the model that we're using now, because there are persons who want to consume content for free. They don't want to pay any money. They just want to be a part of something that, gives them value, and that's completely fine. But there are persons who also want to be a little bit more proactive in terms of how they're investing, how they're engaging, and we want to provide and facilitate for both on one platform. So that's what we have here. And if you want to be able to join us, let me show you how to do that. So you would click on the link in our bio. So our link tree is now simplified with all our links. So if you want to join the investment challenge, you can. This is a monthly subscription. If you want to get one-on-one coaching from me, you click on that. If you want to work with me one-on-one for 45 minutes, you can do that as well. If you want to access our conference content, you can do that. Our website link is there, and then you can become a member of the free community. You click on that link, and you see this page, which allows you to put your email, your full name, and your phone number, sign up for free, and you get access to the community in that way. So that's how we're doing it now. So one, we want to get your name so that we can, when we send you emails, address you by name. 2, we want to have your phone number just in case. Let's say something happens and we want to be able to reach you. We know with data protection and all that stuff, we're being guided to ensure that we are treating this stuff in the right way. So I'm supposed to do get some more information on that. But for now, we're trying to do things in a way that makes it easy for persons to, you know, opt in, opt out, etc. Right? All right. Without the dividend, do I think VMIL is a good buy? Devon, I'm not sure. I haven't looked at the company in a while, so I wouldn't be able to say. Thank you, Andrew. Yeah, thank you for that. Is investing for dividends more stable? Sean, I'd answer that. The answer is yes, 100% more stable, because you can go periods without any meaningful capital gains. And I say meaningful because, remember, I'm aiming for triple digits, right? That's how long I hold for. So you may not always have that. Even with Trans Jamaica, it's only up at the point that it had its peak about 70 or 80%. So the reason why I was able to get triple digits is that my average price is really low. So it's not always easy to get meaningful gains. So stability through dividends it makes sense. Sean is asking, do I think Tropical has the potential to be a dividend stock? Yeah, they are a dividend stock now. Alexander was on taking stock this week. They have been doubling their dividend since IPO. They didn't do a dividend last year, I believe, because of the acquisition, but it looks, our signs will point to them being able to resume that dividend. And so I think so. But I mean, they do pay a dividend. They missed 1 year since they've listed. So remember, I said at the start, you can pay dividends either quarterly, biannually, or annually. So they've been doing it annually. So I think they would qualify for being called that. Michael, which one is PFE? I don't recognize that ticker. But tell me the name and I'll check it out and answer it next time. So, all right, guys, I'm not seeing any more questions. Let me check on IG one more time. So don't see the option on your link tree. No, check it out. It's down there. It's the last link. So it should be there. Dwight is saying Mayberry would not be the biggest shareholders of Wigton if it wasn't for dividend and appreciation, not Mayberry. I can't speak to their strategy. Who knows? Do I think, is Image Plus a good buy for the future? Absolutely. Absolutely. 100%, in my opinion. All right, everyone. Let me wrap up this session here. Final call to action for our community groups. Really want to encourage you to join our community group. It is free and we are slowly building. We're up to 220 members now. So you can, feel free to join. It's free now. It will continue to be free. And what we want to do is have everything in one place where it's easier to have conversations. We can share links. Persons who join who are brand new can, make their way around a lot easier than in a chat setting. So that's why we made the move. And we also wanted to make it easier for persons who want to take the next step to be able to do so. So yeah, the links are in the description, guys, for those who want to join. You already aware, the Telegram link, I don't know how to share that one right now. Where do we have it? We've taken down the Telegram link publicly. But if you search for Learn, Grow, Invest on Telegram, you may be able to find us. But we are not, you know what? Let me share the link one last time. But trust me when I say that very soon this link won't be public anymore. So if you join us on Telegram, just bear in mind that very soon you won't be able to get access to the Telegram group. We'll probably just close the group from adding new members and just leave it, right? So just bear that in mind, because we're encouraging everyone to be over the new group so that we can focus in one place, because I won't be able to over time be posting things in both places and so on. So as soon as we do a proper migration of our links or resources or guidelines, etc., we'll change the invite links to Telegram, and it'll just be a closed group, right? So in that sense, if you want to join now, before that happens, that actually works. Oh, Pfizer is PFE. Okay, all right. Pfizer, which made $1.06, was 44B and 2 new drugs. So okay. So I'll look into it, Michael. I heard about them during the pandemic, and there was a friend of mine who actually liked them as well, but I never checked it out personally. So yeah. All right, guys. Thank you. I'm looking on Instagram. Ricky's saying, how can I get monthly dividends? You can't get monthly dividends in Jamaica. You can get quarterly, but I know in the US you can work that out. And Despi is asking, when will I post a video on the best dividend stocks for the year? I'll post it sometime before the end of the year or early next year. We have a lot of videos that we want to do before then, right? All right, guys, thank you so much for joining us for another week. Really want to encourage you to join our community group. And yeah, I'll see you in the next one.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N, Grow, Invest. Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N, Grow, Invest.